It's the weekly 30-30 trading list on ASX. We're reviewing the 30 best momentum companies over the last rolling quarter and those that have had the best improvement in the last week. On top of the normal 30-30 list, we've also got a market leader's chart to dissect and learn from. Gary Glover has loaded up NVIDIA's chart for us to review and pull apart the best lessons, see where the setups were, and how Gary really looks at these market leaders and understands them. Then we'll jump into the 30-30 list. So with that loaded up and ready to go, we say good morning, Gary Glover from Novus Capital.
How you going, Chris? All right?
Well, I'm kind of excited. I had a bit of a look at NVIDIA and I struggled to find setups in this sort of time frame, and anything that looked somewhat promising to me, it just ended up gapping out beyond it. And then I know sort of before recording you said, look, there were a couple of things in there. So I've got my pen and paper ready to learn what you're going to share with us. So what time frame, where do you start this window that you've looked at?
Yeah, so basically looking at, obviously the recent sort of low there. So remember October 22 was that was our sort of 4-year cycle low. That was the sort of pullback for the NASDAQ and S&P there, quite large and stuff there. So that's kind of the low there. So the video's gone literally 108 on October there to upwards over $800 here. So we're almost eight times. So just interesting to sort of look at that type of move here. But what we want to do is actually look in depth at this sort of chart here and just see what can we learn, from this sort of chart in particular here. So I just think it's interesting to look through that period. You see, obviously, pretty decent downtrend into October 22, and then the market sort of starts to, what happened here is the market actually recovered back to its highs here for the year, and then broke back below the 50-day moving average. So nothing sort of obvious in there, and then it starts to sort of turn up again here. The most interesting thing here, Chris, is that I've got this arrow here, which I haven't got the overlay on here, but that's the NASDAQ. What the NASDAQ did is actually found a low in October, similar to NVIDIA, and then sort of ran up into NOV and then pulled back deep. So the NASDAQ actually came back and, like in December, pretty much retested the low. Didn't get a new low, but came within a smidgen of the low. So what NVIDIA had done there, when the NASDAQ had bounced, NVIDIA had bounced a lot more. So this move here, 100 or 180, that was like an 80% move for the stock here. So that was way beyond, that was showing relative strength versus the rest of the market. So this is a stock that out of that low, they bounced the most, and then when it pulled back, it stayed within the range as well. So at that stage, well, the NASDAQ, most of the market was showing relative weakness because it come back pretty much deep there. NVIDIA showed a big move, relative strength, and even the pullback there had been tight there. So that's the lesson there, is that you're looking for those sort of stronger stocks out of the low. So once we sort of start to see, we think got a bit of a low in place, see how the market rallies, which stocks lead out of the market, then they'll pull back again, which ones hold up the best. Even though this has come back below the 50-day moving average, which is probably a bit of a negative, did get back above that 50. Now, if you were just looking for like a 52-week high, Chris, just to enter here, so it would have been entering on the 23rd of January 23 at roughly around $190. Okay, because this would have been 187. So you could have put a limit order in here. As soon as it breaks 188, buy it up to 190. Okay, you buy these 52-week highs, which is what most people are reluctant to do. But this is what the stock's showing relative strength. I mean, what we're doing every week here is looking at top 30 stocks for the week, showing relative strength, and we're looking at the quarterly stocks showing strength as well. So look at the strongest stocks, and we know those stocks stay there for long periods of time, and the stocks that continue to be strong, they remain strong, and particularly coming out of lows, that is the key thing looking as well. We've seen it in the past there. Remember, we looked at a lot of 360.
I was going to say, for long-term listeners, they'll remember around this time is when you were loading up with the relative strength leaders being 360 and a few others.
Yeah, so look at those stocks that were showing relative strength, and they're the ones that kicked on and had the big moves here. So it's exactly here what the video's done here. So the lesson is to be looking at the stocks come out of lows or, cyclical lows there, showing that sort of strength early, holding up the best, and then breaking through there. Most people are reluctant to buy new highs here, but that's exactly what the principle is. If you follow IBD sort of, William O'Neill's sort of methodology there, you're sort of looking to buy that sort of, whether it's a B-wave break here or break to a new high there, the Davis box, Davis will be buying that breakout there. That's exactly what he'd be looking for. He'd be looking for the strongest stocks coming out of those lows, breaking to new highs there. So that is in January 23. So following that, when the stock just kept running here, series of high lows, high lows, high lows, it never came back to the 50. Stayed here, just kept riding all the way through here. So this has remained pretty buoyant there. Only crossed the 50 in August of 23 there. So I know William O'Neill, but any stock that closes the 50, he's out. So, he might have been seeing some, just a little three thrust high here. Might get a bit nervous about that. Maybe seen a little bit of selling in here. Maybe breaking a swing, little three-wave low and then breaking below might have had you out depending on your rules there. But worst case scenario, if you just followed some of William O'Neill's principles there, you would have been out at 430 or something, 425 or something. So if you're in at 190 and you're out at 441 or something, 442, it's a pretty nice return here. So and now you're just sitting and watching you. Okay, so again, what happens from here is the stock sort of goes sideways for quite a while here. Now, again, this doesn't look, particularly appealing here. The whole thing sort of congests under the high here. Again, this arrow here is basically highlighting what the NASDAQ did at the same time. So the NASDAQ went through a pretty large correction sort of from this sort of July, August period all the way through to October. So we'd had a really deep pullback into the range. And what's the video done here? Really, after going from 100 up to 480, 490, it's just congested. So it stayed pretty tight in a tight band. So the rest of the market's having a deep pullback. The video is showing relative strength there. And we can see here on the chart here, a little false break there, Chris. See that little false break there? I know Chris Karcher and Gil Morale, as they call it, I think they call it the owl trade or something. They got their own name for it, their little false break here. But they're looking for those sort of sideways orientated stronger stocks just to come back, break to a new low, and then kick up here. So got a little bit of a false break here. So look, not for everyone. Definitely a pattern that I do look for personally. But even if you were just looking for like a little bit of a B-wave break here, maybe break above previous high, that's around about 476, 480 there. So that might have been the first signs here that you're thinking, okay, had a little false break here, starting to break a B-wave. This looks pretty solid here. So you might have got long here around this 470, 480 sort of mark here. Come back to the 50. The 50 moving average there was where you'd be probably keeping a stop here. So you wouldn't want to see this close below the 50 personally. And, you can see here it didn't do that. Hugged the 50 there. It's gone back to retest the high and again got this really sharp there. As we know, Chris, we see this all the time. When you're congesting, staying tight price action underneath the old high there, and you've already shown relative strength versus the rest of the market, those are the ones that break out here. So, again, even if you hadn't bought the false break, you hadn't bought the B-wave break, if you were just waiting for this little, because this is a bit of a cup and handle in here, almost two little cup and handles in there, it stayed pretty tight too. Stayed within 50% of the price action, stayed again within price action, nice and tight here. So even just buying the break here, what's that? You're basically looking to buy, so 505, so if it goes to 506, maybe living up to 508. So just say you got set at 507 or something here. You would have basically been long the stock here. And since then, it's hugged the 10 and the 20. Still pretty firm here. Still in the trade there. So just some of those basic principles that, the bad make money in stocks there, William O'Neill, just following the stronger stocks there, little cup and handles, the breakouts there, even waiting a long time for those sort of 52-week highs to buy them, like the Davis there, even those, not trying to enter too quickly, still some pretty good signals in there. But the key there, I reckon the biggest lesson is how the stocks trade versus the index. So both of those periods there. So this period here in 23 here, which was October 23, Nvidia's held up really well while the rest of the markets got kind of, partially buried. Okay? And then out of that low, markets had a really deep test of the low here. Nvidia showed relative strength. It's come out of the low hard, stronger than anything else, and it's pulled back a lot shallower than anything else as well. So all the other stocks have all come back pretty deep in here. So again, it's that relative strength there, which we're looking at, Chris. We're looking at that every week. That's what we're trying to highlight here, is the stocks that are showing relative strength weekly, trying to show that the sectors have been running for a while, trying to catch a sector as well. So we're really trying to catch a sector, a theme, because that's really where we've sort of caught some big winners here recently. So at the moment, we've been talking about lithium the last 2 or 3 weeks there. That's the sort of the sector which is sort of heating up here. Right, I've had 2 days this week there. My portfolio has been up 3.5%, and largely due to being long a lot of those lithium stocks there. Some big moves coming in there. Just that sector showing relative strength there the last few weeks, really starting to move there. We saw the same thing with uranium there, maybe 3-6 months ago, and just showed relative strength of sector moving on there. That's the lesson there, is that sort of the relative strength of these sort of stocks there, holding up versus the market, and then going back up there. And just that tight price action, I mean, you sort of know that, if you're strong sort of stocks there and you're showing that relative strength there, under the highs there as well, and you just leave yourself in a strong position there. So that's what we're going to try and identify, that sort of theme there. So yeah, pretty interesting there, I think. Chart, some good lessons there. But even just being really, really patient there, I mean, it's probably only maybe only 2 or 3 pretty solid signals in there to sort of trade. Not a handful, but with a hedge.
You'll still catch a fair portion of the move by looking at what you just explained there.
Yeah.
You won't get all of it, but you'll get a lot of it.
If you go back and look at Afterpay, which is one of the big ones for Australia there, and look for the same sort of setup there, it was similar tail. It was probably only about 4 setups over maybe about 5 or 6 years. But if you'd sort of waited for them patiently, waiting for them to break, and then you capture all the moves, you end up sort of capturing sort of 80-90% of the moves by being patient, rather than sitting in for all the sort of trials and tribulations and all the big pullbacks as well. Just having that 50-day moving average as your worst case scenario sort of as a stop, that'll sort of avoid you all the big drawdowns in the market as well. So pretty interesting stuff here. I think it's kind of highlights what's sort of going on in the market. I think it's pretty interesting here. If you look at reporting season, Chris, as well, for an Aussie market here, and I know a few people were talking about, I mentioned sort of some of yesterday's heroes, sort of BrainShip and Weebit Nano, and a few people were saying, hey, why aren't you more bullish for these stocks there? Mate, I'm not more bullish about these stocks here because they are, you can, how do I say this nicely, Chris? It doesn't matter how much you polish a turd, it's still a turd, okay? So, and what I mean by that, I don't mean to be sort of deflammatory there, is that if you look at your reporting season, you see here, Weebit Nano, half yearly revenue, 153,000, a loss of 25 million. So these are companies not making money, okay? BrainShip, I think the full year revenue was 232,000, a loss of 29 million. So these companies aren't making money. They don't have a strong revenue line. They certainly don't have a strong profit line there. So they're kind of like moths to the light here. These, we're drawn to these shares because they're in the shining sector, and they're in appealing growth there. But they do not have strong revenue, and they do not have strong profit. If you look in reporting season here, all the stocks that are actually kicking it out of the park, so you've sort of got your, the AD8s, like 360 today, MP1s, all the stocks that are basically kicking goals here and really having big moves there. And we saw it with Neuro, Telix. These companies there have had strong revenues and strong earnings, and those strong earnings are growing. So if you're vetting companies, so just say if you're looking at, I've cost me $1,200 a month for Iris, Chris, which is $12,000 a year, which is probably too expensive for the average trader there. There's probably another way of actually finding that data there. I mean, if you just, in Australia, we only report twice a year. So in the US, they got to report 4 times, probably. But in Australia here, so if you're looking at the full year and a half year, you can sort of see what the revenue growth is and what the profit growth is or what the earnings growth is. So you can kind of go back and see how strong those companies are. I'm sure there's a way to vet. There's probably a cheap way to vet. So maybe someone out there knows a cheaper way to sort of look at, to go and vet. I've got a list of stocks that are sort of got earnings or revenue over 15% growth and profit over 10% growth, just so I can try and capture a big list of highly profitable,
companies that are growing their revenue.
Yeah. And but look for that list there. That probably captures about 95% of all the big movers. A few sneak in there, a few minors sneak in, and a few other sort of stocks might sneak in there, but it captures most of them there. So that's why I'm sometimes I talk about some of these sectors, like the buy now, pay later, never made a lot of money. Yeah, there's some growth in there. And Afterpay sort of was probably one that did there, but most of the others didn't really make too much money there, sort of bleeding money most of the year. So really got to be sort of trying to vet there for, earnings growth and revenue growth. And if you look at, Dan Zanger, I think he's got the world record for making the most amount of money in the past period of time here. He often sort of talks about really only sort of focusing on maybe the top 5 or 6 stocks in the market. He goes big with all the strongest. So he's looking like 50% revenue growth, 50% earnings growth, trying to narrow those down there and being more sort of selective, tighter, but then moving forward there. And those are probably the lessons that, me personally, it's taken me 20 years, Chris, to learn some of these lessons in the market there, about strongest performers, strongest momentum, strongest growth there. And those are the stocks we've got to look at. So look at the stocks that are, we're filtering for earnings and for revenue growth, going to give us a pretty nice basket of stocks there. And then secondary, looking for price action. We're looking for stocks to show that relative strength versus the market as well. A couple of really good examples recently, Bigger Data and Jumbo. Those stocks were not performing pretty well going back in the last year, whereas the sector was performing pretty well. Yet you look at the revenue line and you look at the profit growth, very strong here. So I thought to myself, what's going wrong with those stocks here? I remember Jumbo in particular got down to sort of $13 here. It didn't make sense as to why it was down here. So look, sometimes you ask questions like, okay, has something changed with this company? Something going wrong with the company? And then, so you're starting to do some investigation as to why it might be down here. And in the end, the stocks had a bit of a run, a little bit of a congestion there, broke the B wave, and then the rest is history. It's gone. Bigger Data was exactly the same. This was sort of lagging here, sort of, the rest of the tech sector was at new highs in August last year. And these stocks were lagging here. It didn't make any sense to me. But eventually we sort of got a little bit of VCP and hitting breakout. And then not only is the earnings growing again, they've actually got a new product there and the whole thing takes off again. So that's why sometimes betting for the best metrics is a good way to have a look at these companies as well. It just gives you an extra arsenal there. So just got to be careful, on the relative strength list that we do, there's a lot of companies on there that are probably nice and shiny and bright, but not really have the strongest fundamentals behind them. And they're the ones I'm probably worried about. I get a bit of feedback, why don't you like this stock? It's doing this, doing that. That's the reason I don't like them as much, because it's just not the same quality. So if you look at all the biggest winners there, PMEs, they've all got really strong fundamentals as well. So I'd encourage you to vet a bit more on the fundamental side and then look at what's holding up as well. And then you're really getting a mix there. That's the key. It's taken me 20 years to work it out. If you've been watching this for a couple of years, you just save yourself 18 years of work. So I'm giving you an 18-year head start on me. So that's the key to super performance, in my opinion. Looking at that sort of brand stock here. So let's get into the list, Chris.
Yeah, right. So there's performance, the metrics, the profit, the growth, the revenue growth. And you've also got the thematic, the whole sector, the industry's doing well, like you're talking about IT at the time. and identifying the anomaly. But also you have a look at this momentum list and find out where the leaders are, knowing what's driving the market and where the strongest companies are relative strength-wise. So that's the quarterly list that we've got now. I guess PWA, is that one of the first ones off the list that you've pulled out this week?
Yeah, that was a number one here. Last thing on the chart here, Chris, big gap up, and then a massive selling volume bar, so the biggest of the year. So that tells you, obviously, it's had a run, hit some heat, then all of a sudden, all those maybe insiders, everyone who's sort of been riding this thing here, suddenly takes some profit here. So that's probably the bar that you don't want to see if you're long. So, but that often sort of comes in after pretty decent movement. So that, although it's had a pretty cracking run there, that's a no now. Grain ship, as we mentioned there, again, this thing had run pretty hot there. I'm saying, Gary, why don't you like it more? Well, I like it more because the fundamentals typically haven't been good for the company and they're actually getting worse. So might be getting shinier, being in the right sector, but the numbers don't lie. So just got to be careful, those sort of stocks. So you really got to be looking at quality sort of, But if someone's got a good way of betting there, a cheap way of finding sort of, list of quality sort of stocks there with strong earnings and profit and revenue, please put some notes there on the YouTube page for the rest of our viewers there. But I guess at the very least, you look at the momentum list, see what's on there. You could probably go and look at the last half yearly and full year result, the last two results, just to sort of get a gauge as to what the revenue and the earnings growth was there. Those are the two things that you should be looking at as a minimum, in my opinion there. FND, geez, I mean, look at that. This one hurts me. Just because it sort of had that really tight consolidation there, had a big move there, like a 40-50% rally out of that VCP. So again, that's that relative strength, big volume, tight price action, dragging the B wave. Since then, we've had a few pullbacks, the light volume there just keeps moving up here, Chris. Even the pullbacks are just sort of tightening up again, low volume popping through here. So that's what I mean. There's these stocks there, I would have thought this is a good move, 50% rally, take your money and run here, but had a pullback there, no volume, stayed tight and then gone again. Again, another pullback, tight again and gone again. So just sometimes we've got to be, it's the what do they say? It's the sitting where you make all your money. Being able to sit, the price action is doing the right thing here. So again, these are lessons I'm learning too as well. Being able to get the good trades on there, sort of good risk reward, and sit tight. APM's one has had a pretty good jump here. Just waiting for a bit of a consolidation, Chris. It's sort of hard. This one's sort of gapped up here in good news. Probably just need a season period of consolidation, tightening up there. Might be one to sort of keep an eye on there. Drone Shield's had a pretty big move, but again, last thing on the chart here, again, sort of had that big run, popped up on some good news, and then next day, all the sellers, start to book some profit here. So pretty big sell line there. So that's probably, again, not what you want to see there. So that's a big negative for me, seeing that big, massive volume line there overall there. So it's a no for me. BBS there has been pretty positive there. Again, it's just been impulsive, corrective. Again, impulsive here, and then just saw the volume tighten up, and it's gapped up again. Even this pullback here, we saw the day. Pullback here again, that's the volume. 2 or 3 days down, he just dried up again. All of a sudden, we're sort of moving up. So, again, it looks late in the move here. It looks like it's long in the tooth here, but still not showing selling. So, as we know in the past, they're the ones that sort of often sort of keep going. EOS looks, again, had a pretty good move already there. Probably just want to be watching tight here. Levitas is, again, I guess this is the beauty here of the sectors, Chris. We talked about the retail sector the last few weeks there. We mentioned sort of Stan Weinstein talking about, if you saw two charts look the same, one was in a weak sector, one was in a strong sector. You trade the strong sector every single time here. So we know these retail stocks have been really buoyant, been breaking up here. So they're all breaking up. So we know sort of, so we saw ADH, a little cup and handle in here as well, Chris, like a little went up to retest the high. Looked like a bit of a false break, which in the past I'd be thinking was pretty negative. Let's pull back here and then just exploded through the handle there. So there's a little, little B-wave break here. So again, most people will be reluctant to sort of buy those breakouts. So this is, again, you're in a strong sector. Get a pretty good update there. Once you've gone through this high, it's just going to keep rolling through here. So $2 to 240. That's that's a 20% move. It's still pretty decent there. So all in about 4 days. So that's why you got to trade these sort of stronger looking stocks here. EGR looks pretty solid. MMS had a pretty big run here. It's gone back to the high here now. So now you just got to watch tight here and see what happens there. Pretty decent volume has come in here on this break here. That's probably the most interesting thing is the volume should be pretty robust there. So nice to see maybe some sort of cup and handle or some pullback or consolidation there for a while. But yeah, probably just need to watch that one. Put it on your watch list. OPT again had a pretty good line here, but again just got that massive volume come in there. So quite a few stocks have been running, are starting to show distribution signs. Big profit taking coming in some of these stocks that are run here. Often case some of the sort of smaller sectors as well here. So just pretty interesting. That's our order.
So the quarterly momentum, which you've said strong relative strength against the indices, they're the best ones performing on the Australian market.
Yeah.
When you have a look at the next ones, which are the weekly ones, the ones that have had the best improvement in their weekly momentum, are you finding any themes or things that are standing out to you and go, hang on a second, there might be an opportunity within this group?
Like obviously we talked about lithium names there. So the last 2 or 3 weeks we've seen quite a few lithium names pop onto the last 3 weeks in a row, Chris. We've seen lithium names on the list this week. Yeah. So we're seeing the whole sector come alight here, and moving up quite nicely there. So plenty of stocks in that. So PNT, Patriot Metals, that's had a nice little move there. So we've got a, nice little low there. Some good volume out of the low. So we had that, look here, we've got 3 good days out of that low, pull back, much lighter volume, and then gone to a new high here, pull back again, lighter volume, and then bigger volume again. So pretty constructive here. So I'm watching this pretty closely here because this is a 0, 1, 2. If I see a third high low here, it could be one to sort of look at there. So it does look quite good there. I've sort of done a little bit of trimming today, Chris, just because I've had a pretty big move in some of these names. Like the PLS has gone to 440 here pretty aggressively, even though there's a massive short squeeze out there on that stock. Massive short positions. Everyone's been caught out here. Volumes look really good. Looks really strong here. But I've had a bit of a gap here. If you're heavy, long, you've got to sell some in the heat. That's just sort of, that's your strategy. That's my strategy. Then I'm just going to sell a little bit in the heat there. So I'm still long, a few of them there, but I will sell a little bit there as well. And the Liontown as well. It's had a nice little, first high low, second high low, some better volume there on the up there. So got good construction here now, sort of, first, second high low. So these are all building quite nicely. A lot of these lithium names there. I think AXE was on the list as well. A bit more volatile. This one here, some bigger volume in there. This one is not one that I've traded, but yeah, just interesting price action. But there was just plenty of moves. I really like the IGO here. That one is sort of, I think we had a little false break of the low down here, then a little reversal, went up a little bit, came back and retested, went up again, it's come back here. So we sort of got a false break. First high low, second high low. Starting to get some pretty good volume through here. Breakout B wave there a couple of days ago. Pretty good signs, pretty good volume through there as well. So building quite nicely.
What about that massive, yesterday's candle with the massive amount of volume? How do you interpret that?
Yeah, I think that sort of, had to sort of come in late, some sort of crossing there. So yeah, it was sort of interesting there. Sort of, the stock actually got crossed 10 cents lower on the match. And sounds weird. Sometimes I get suspicious of things like that. Sort of like, if you're a fund manager trying to build a, broker, you've got a big institutional order and you're trying to get set for a client there. you run, buy it all day, try and knock it down late so you can kind of reset the next day to maybe to lower. So just things like that. It's just over the years, you see weird things like that happen to these share prices. That no surprise to me to see it gap up today. Just everything else right. But price action is still pretty positive. Just little, change of character here now because we've now broken above a swing high. So some good signs there as well. I mean, S32 is the other one, which is a little bit, probably twice the market cap of IGO. I think cobalt, silver, copper. So a lot of the metals that are probably underwhelming so far. But we know sort of the miners are typical, very cyclical sort of stocks there. So this is one to keep an eye on there. It's almost half the price. Because I was thinking the other day, I think it was 544 was the high. So 272 would have been exactly 50% present. So I got down to 275. So go with the 3 cents of having. So often I've seen that over time quite a few times where stocks have pretty harsh hit. They get within a cent or two of halving in price. There can be an area of support there. So definitely watching that one pretty closely here at the moment, just because it's really underwhelming here. But I guess those lithium names they're the ones that are sort of standing out, and they're starting to get a few high lows, which is pretty good. I think it might have been LEL was another one on the list. That's had a nice little move as well. Okay, volume in there. What else was in there? But yeah, so I thought 5EA was sort of interesting there. Bit of a small one, it's had a bit of a jump on some big volume there. Still in a pretty strong downtrend, so probably less appealing. APX has had a bit of a bounce here, but this is again another branch we bit now as a stock here. Really, if you look at what's been happening with the fundamentals for the last few years, they've deteriorated, rapidly. So losing contracts, revenue line is depleting, profit underwater. So just in a really shiny AI sector, but underwhelming. And again, the weekly, so many losers in here. It's just gonna have a tough time getting up there with so many people underwater. Anytime it has a bit of a rally, people will be looking to sort of try and exit, try and get out even square or half of what they paid for, or 25% or 10%. So it's just going to have that headwinds there. It'll make it hard there for that stock there. MYX is pretty interesting there. This was a stock that had a really strong rally there, pulled back there, did come under the 50 there, but once it actually broke above that little B wave there, that's probably the first little signal there. Obviously did it on a report, and it's kicked on since then. So this is the thing. Sometimes you can get that really game changer sort of for the company good news, and a stock that's already showed relative strength already. That's what you're looking for. So looking for stocks that had a strong run, had a bit of a pullback, looking to build again, and then go through the B wave. That's not a bad signal there. So had a nice run since then. So these are the stocks that all the the pros and stuff. If you read about sort of Zanger, and he's just really looking at the strongest stocks there. I mean, Kalamagi is trading the top 2% momentum stocks as well. So doesn't trade anything under 98 centile. So he's looking at the strongest 2% stocks and just trading them only. So that's why it's important to be looking at the stronger stocks here. This one's interesting here. I did trade sort of ABB. I did take a little bit of profit into that heat there. Come back, but knocked out of the rest of my stock here. And then it sort of did break below the 50-day and then kicked on there. It was just a little tight there. But again, look at that. That's really, had that pretty good news there. If you saw that result there, it's obviously gapped up on game changer news again and then run again. So we're just seeing stocks really take the good news and run up here. So even if you just waited for the B wave break here, 421, stood at it, 421 up to 480, it can move really quickly, these stocks there, Chris. So I mean, just waiting for confirmation of these sort of breaks and stuff there is, it's kind of, I guess, the things we should be looking for there. PME, highlight this one here. Obviously, it's been a stronger name than it's been a strong performer here. Last thing on the chart here is not a good thing. Okay, and I'll explain to you what I mean by that. That's had a pretty decent move. So 110 down to 85 there. So, good sort of 20% sort of drop here. Pretty decent volume too through here on the sell down. It's a pretty heavy selling through there. So that correction is the biggest correction of the move. So if you look at the pullbacks in the movie, they're pretty tight, pretty small, big. That's the biggest correction of this run here so far. So that's what McLaren would call an overbalance of the trend. What normally happens following overbalance of the trend is they'll either come up and make a first lower high and then retreat, like do a larger ABC, or sometimes they even go to a marginal new high and then break to a marginal new low again, like a bit of expanded to the top there. But the overbalance of the trend is a warning sign for that trend normally. And it doesn't work every single time, but I'd say 80-90% of the time it does work pretty well. Gives you a head up. So to me, this is probably a stock here to be really cautious about moving forward here, just because there was a bit of selling in there and it did overbalance there. So I know it's a strong name, good company, but that price action there is a warning shot, just to be a little bit more cautious than normal with that company in there. Thought Square is pretty interesting. SQ2, that's sort of, again, had that pretty decent run up here, up to the high. Big sort of cup, big handle here, Chris, and we're breaking through here. So looks pretty interesting. There's some good volume too on this move here. You look at our weekly chart here. That's a big cup and handle on a weekly chart as well, and that's not bad volume. Pretty light volume in the pullback. And then what are we seeing here? Really strong volume here so far. So this has just gone to, probably 52-week high here now. That's actually a pretty strong signal. So nothing negative about Square there. That's actually pretty constructive price action. So even though it looks pretty high in the range here, that is a good technical setup there. That's one that we often look back and see those setups in the past and go, hey, look at that cup and handle. Look how the stocks, it's the one. So that is a pretty bullish setup there on the daily and the weekly chart there. So, just pretty interesting there. I think that's mainly. I think EVT was on the list. That's pretty decent as well. I think that's sort of showing some good signs there. Probably more on the weekly setup there, just because they sort of come back a bit of a key technical level, showing some support there. Some good volume sort of come in at the low here and on the bounce there. So looks sort of constructive. It's a bit of a hard one to trade there. Probably not going to be a belter, not a fast mover there, but some okay signs there. Actually, sorry, the other one I missed was CMM. So again, Chris, this is the sort of chart we want to be looking at. So see how tight this price action has got here, and look how this stock's had it's hardly had any selling. So if you look at a lot of the golds, some of the gold stocks have had pretty decent pullbacks. This is just tightened up. The pullbacks are getting smaller and smaller and smaller here. The whole thing's tightening up here. Just looking like it might sort of break out here. So this did sort of break above a little swing high the other day. It's a little bit of a B wave break. Some good volume in there as well. So this is pretty interesting there, just considering how tight all this price action is under the high here. So that looks pretty constructive to me. I know there's a few gold stocks I thought looked pretty interesting here at the moment. I mean, the gold and silver price has just been consolidating, tightening up. I know some of these stocks are starting to, this is just lower high, lower high, lower high, lower high. But they were just broken above first lower high today. I just noticed a few of those sort of golds are actually just showing, there's some names in there showing a bit of strength, even though the commodity has been a bit weak. But you look at where gold is, if you look at the gold price there and the silver price there, that's pretty tight. Tight action there. If you look at our weekly, look at that tight price action under the high. That's a stock. That's really good price action. That's constructive pricing. It's struggling to go down here. It's just holding tight here. So I think silver's the same there. So it'd be interesting to watch gold here the next week or so here. Just sort of have a feeling there that some of those gold stocks might be interesting there. Just Those Northern Star has tightened up. A little bit of a BCP in there. Even Evolution has come back a bit. Still a bit early, probably one of the weaker names. I think Silver Lake's had a bit of a bounce there. Again, probably one of the weaker names, not good volume there. I think DEG has broken above a swing high, so it's sort of, some signs of strength there for some of those names. But yeah, interesting price action for a lot of those companies. The only one I missed there, Chris, was in that lithium sort of space. There was sort of obviously Mineral Resources, which is one of the biggest names, and that's obviously very diversified business there, quality business there. But that has sort of shown a bit of a bounce there, some decent sort of strength as well. So, but yeah, definitely a bit happening in the marketplace. It's a pretty decent environment there. Just I think it's really good lessons there in terms of just looking for that, following those stocks that are showing that early strength there. Some of the sectors come to life. Just definitely doing a bit more betting on the quality of company. Just this reporting season has highlighted to me the quality are the ones that are kicking on, and the ones that are sort of the flashier companies that are sort of in the more interesting sectors there without the credentials are the ones letting us down. And that should be the way. That's the way it should be. So quality. Process.
That's a good quality. Process.
Yeah.
Well, that's a good delineation to take. Once you've done the process, separate for the quality, and then continue back to process. That's we do say thank you for unpacking the NVIDIA chart, teaching us the lessons of relative strength, finding the leaders, finding the leading segments, sectors, and industries, and then how to identify where those breakouts are and being patient with them. And echo back to many episodes before where you've said buying right and sitting tight. And not only for NVIDIA, but a lot of these charts that you've shown us today, you've been able to see that buying right and sitting tight has worked quite well for you. And yes, I can see you putting on screen there 360. That is one where you were buying right. And how's that one working out?
Working out quite nicely today. So again, it's sort of like it's a company which has been growing quite nicely, a bit like Zero. Its revenue line's been growing pretty strongly, earnings per share growing nicely. These companies are sort of transitioning from being non-profitable back into profitable now. So there's super strong growth there. When you get 40-50% revenue growth and stuff there, and then your earnings starting to turn around, it's like those are the stocks we're looking for. Those names there. I mean, it's funny that I noticed that quite a few analysts had quite a few sort of small growth funds had 360 as the number one pick. So I always get nervous when I see too many managers, I think, all picking up together. But mate, it's a quality company. They did. So many people use 360, and there's a runway there for it as well. All it has to do is it's increase its cost. It's increased the cost of buying it a little bit. It's going to impact the earnings significantly. So again, just another quality name. Sort of just we saw Zero. Just seeing some of those better names that have had history of strong growth there. The one that I think really interesting here is ALQ. That's had it's been reporting pretty strongly at something like around 25% revenue growth the last couple of years, but it did have that big run, Chris. So it's sort of gone from 4 to 14. So sometimes you need time to absorb that move. So you got to when they run so hard on pretty good numbers, then all of a sudden the PEs get really high, and then you're like, oh, can we substantiate it? Well, it's got to keep delivering. So if it keeps delivering, what I often do is the share price will actually stay in a tight band for quite a while. But then if it keep delivering, then it'll eventually pop through there. So this has got the right characteristics here, right sort of setup here. Just has to keep delivering there. So that's why we got to watch those sort of how the companies sort of progress. That's why you sort of vet for those strongest sort of revenue growth, strongest earnings. They're going to give you the quality names there. I think if they got a history of keep delivering, it's funny how they sort of keep doing that. We saw Domino's there recently. He had a bit of a miss, and then had a second miss and a third miss. So And I sort of you guys talk about once you sort of start missing, then it's it's a bit of a trend of missing. So once you're sort of once you're hitting or exceeding, so there's almost a trend of exceeding, So it's funny how that works, So so just got to be careful. That's why sort of just doing a little bit of betting there on that earnings growth and the revenue growth is something which will just keep you in some of the better names there and give you better odds of success there. That's what the best traders are doing. That's what we've sort of got to move towards if we want to be better.
Well, to that point, Gary, you are talking about the better companies to be trading and what we are supposed to be looking at and should be looking at. That's consistently what you're doing in your Tuesday report, where you're filtering in your trades that you're putting forward to your own clients as well as your own portfolio. We'll put a link to that on the right-hand side. And also the strategies are set up, some of them that you've talked about. There's a whole playlist of those and your insights into research, deeper dives into thematics and cycles. And on the left-hand side is your Twitter handle if anyone wants to follow you there. And that we say thank you, Gary Glover from Novus Capital.
Thanks, Chris. We do this every week, twice a week. This lesson here today, if I was a young person, 20, 30 years younger, I would be giving myself advice to go back and listen to this one 2 or 3 times, because this is probably some of the more quality comments and things that are most important to long-term success and particularly following momentum stocks as well. So obviously we got to look at, we're looking at good price action and stuff there, but looking at some of those, the quality fundamentals behind them do make a big difference there. So, go back and look at, do some reading from, William O'Neill, How to Make Money in Stocks. Look up Dan Zanger, what he does as well. I mean, these guys have got a track record of overperformance there. It's because they're trading those better names, that's the strongest stocks, and they got a process to get themselves in and out. We overcomplicate this business sometimes. So if we could just show a bit more constraint, stick to the top end, follow a nice tight process there, it doesn't have to be that complicated.
Well, it's showing in your results, so we can see it. And thank you. As Gary said, we'll be back on Tuesday looking at his report there next week.
Thanks, Chris.